Good afternoon, everyone. My name is Stephen Herwire. I'm owner of Herwire Financial. Today is May 30th of 2025. Okay, after today's market wrap, we're going to talk about the unexpected limitations of personal deductions. So, just because someone says something's deductible does not necessarily mean it will be deductible for you. So it's one of the primary limitations is itemized deductions. When filing as a taxpayer, you get to choose between a standard deduction or itemizing their deductions. It's essential to remember that deductions are claimed against your income, not your tax liability. So keep in mind, if your standard deduction is more than your itemized deductions, you'd be well advised to probably take the standard deduction. So the value of your deductions, if you're itemizing, depends on your marginal tax rate. The higher your tax bracket, the more valuable each deduction dollar becomes. However, deductions may save you less money if your income drops into a lower bracket. The world of personal taxation and tax deductions can often be puzzling. While these elements aid in reducing one's tax burden, they may also come with unexpected limitations. These limitations can take taxpayers by surprise, reducing the potential tax reduction they envision when they're filing their taxes. So we're going to go over some of the common ones. Mortgage interest, state and local taxes, also known as SALT, medical expenses, and charitable donations. Mortgage interest. When you finance a home, generally speaking, you get to write off the interest. However, there's a limit. After December 15th of 2017, you're limited to interest on up to $750,000 of mortgage debt. Also, the interest on home equity loans is no longer deductible unless the funds are used to buy, build, or substantially improve the taxpayer's home that secures that loan. Starting in 2018, under the Tax Cuts and Jobs Act, taxpayers may deduct up to $10,000, $5,000 if married, filing separately, for a combination of property and state and local income taxes or sales taxes. This limitation can be considerably restrictive, especially if you live in a high tax state. Now, it's possible, due to legislation currently being negotiated in Congress, that $10,000 limit may be increased. Medical expenses. Another critical area where limitations pop up is medical deductions. Taxpayers can only deduct the portion of unreimbursed medical expenses that exceeds 7.5% of their adjusted gross income, which means if your adjusted gross income is 100 grand, medical expenses that you don't get reimbursed for after you've shelled out $7,500 in this hypothetical case, can be deducted. If you have a higher income, that dollar amount's higher. If you have a lower income, that dollar amount's lower. Check with your tax professional. Charitable donations. They're not spared from limitations either. Generally, you can deduct up to 60% of your adjusted gross income for contributions to public charities. However, there are tighter limits for gifts to certain types of nonprofits and donations of appreciated assets. In most cases, in order to benefit from these deductions, you must be itemizing deductions as opposed to taking the standard deduction. However, there is an exception. If you are older than 70 and a half, there's a technique called a qualified charitable distribution where you can benefit even if you're taking a standardized deduction. Alternative minimum tax. Some deductions could trigger the alternative minimum tax, a separate tax system for limiting certain deductions and not permitting others. Without clear understanding of the alternative minimum tax, taxpayers claiming large amounts of certain itemized deductions may owe AMT, potentially increasing their tax liability. In conclusion, while personal deductions can help mitigate your tax bill, they have several unexpected limitations. Understanding and factoring the ever-changing tax deductions into a broader tax planning strategy is critical. Financial and tax professionals can help taxpayers navigate the complexities of personal taxation by optimizing their tax saving efforts while staying compliant with the law. Contact them today to get started preparing for next year's tax season. You say, Steve, it's the end of May. Tax season's over. It's like, no, tax planning is a year-round process because there's certain things that won't wait till April 15th. And here are a few of our sources. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, most important question, in my opinion, is, am I saving enough and is it in the right place? When you're in the glide path to retirement, which is the last 10 years prior to retirement, that's my definition, will the USS retirement be shipshape on the appointed day? Retirement, how do I avoid running out of money before I run out of life? Finally, legacy is what I worked hard for, get to where I wanted it after I'm done with retirement. I do in-person Zoom and phone appointments. I am licensed and registered across several states and can easily add states if there's a need. If you'd like to schedule an appointment, click on that schedule an appointment button in the upper right-hand corner of my website. Want to see more videos like this, go to my website, click on the YouTube channel button. It's that red one, 2 buttons over from the scheduler button. If your friends want more information, they can follow me on Facebook, LinkedIn, Twitter. Please like and subscribe my YouTube channel. If you prefer the good old-fashioned telephone, 518-631-2569. Do not text that number. We'll both be sad because I won't get it. There's a separate texting number below that. Opinions in this material, general information only, not intended to provide specific advice or recommendations for any individual. All performance reference is historical. No guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax, legal, ERISA, or investment advice. Consult your advisor prior to taking any action. Unmanaged index returns do not reflect fees, expenses, or sales charges. Index performance is not indicative of the performance of any investment. Investing in stock includes numerous specific risks, including fluctuation of dividend, the loss of principal, potential illiquidity of the investment in a falling market. Investing in mutual funds involves risks, including possible loss of principal. Fund value will fluctuate with market conditions, and it may not achieve its investment objective. Dow Jones Industrial Average is comprised of 30 stocks that are major factors in their industries and widely held by individuals and institutional investors. Standard & Poor's 500 index is a cap-weighted index of 500 stocks designed to measure the performance of the broad domestic economy through changes in the aggregate market value of 500 stocks, representing all major industries. The NASDAQ Composite Index measures all NASDAQ domestic and non-US based common stocks listed on the NASDAQ stock market. The market value, the last sale price multiplied by total shares outstanding, is calculated throughout the trading day and is related to the total value of the index. Herwire Financial and LPL are not endorsed by or affiliated with the United States Social Security Administration or any government agency. All investing involves risks, including loss of principal. No strategy assures success or protects against loss. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not provide against market risk. All right, everybody, have a terrific weekend.